Most people think investing starts with money. It doesn't. It starts with a decision that feels almost insignificant. A random Tuesday night. You open a brokerage account. No ceremony, no dramatic moment. Just a form, a routing number, and morning, night, in between. The price moves up, then down, then sideways. You feel every fluctuation like it means something, like you should be doing something. But here's what no one tells you. Watching doesn't change the outcome. What changes is you. Suddenly, the world looks different. A company you own shows up in the news and it hits differently. Earnings reports aren't just numbers anymore. They're signals. You slowly start connecting what businesses do to what their stock prices eventually reflect. That connection is slow and easy to underestimate. But you're building something far more valuable, a way of thinking about ownership, value, and time. Most people stop here. They lose interest, the account sits untouched, life feels faster than their portfolio. But if you don't quit, something shifts. You stop treating investing like a lottery ticket and start treating it like a system. Now, you're different. You automate your investments. A fixed amount leaves your account every month without you needing to decide again, because the hardest decision was the first one. Your money starts flowing into structure, an index fund, some ETFs, a few companies you actually understand. Then the real test arrives. The market drops. Not a small dip, a real drop. Your portfolio is down 12%, then 15%. The number on your screen is now smaller than what you put in. Everything in you wants to act. Sell, escape, stop the loss. But everything you've learned says the opposite. Hold. And holding feels like doing nothing. But doing nothing is the right move. So, you hold. And eventually, the market recovers. But now something has changed again. You've lived through it. Dollar cost averaging isn't just a concept anymore. It's experience. You bought when prices were lower. Your future returns quietly improved. At this level, your gains are still modest. But your behavior? Completely different. You think in years now, not days, not weeks. You understand something most people never do. The difference between a portfolio being down and an investment being broken. Then one day, you hit your first major milestone. $100,000.
It's not just a number. It's a shift in perspective. Because now 1% doesn't feel small anymore. It's $1,000. A good year doesn't just feel nice. It adds real money to your life without you lifting a finger. This is when compounding becomes real. Not theoretical, not abstract, visible. You start managing your portfolio intentionally. You set allocations, maybe 70% in equities, 20% in fixed income, 10% in cash or alternatives. And when those percentages drift, you rebalance, which feels strange. You sell what's doing well and buy what's underperforming. But you do it anyway. Because now you're thinking differently. You're not chasing returns. You're managing risk. You start asking better questions. Not how much did I make, but how much risk did I take to make it? You look at drawdowns, correlations, tax efficiency, small optimizations that quietly compound over time. And then your portfolio grows again. $250,000, $500,000. Now, the game changes. You're no longer just building wealth. You're optimizing it. A small improvement, just 2% more return, can mean thousands every year. Over a decade, it becomes life-changing. You start diversifying beyond stocks. Real estate enters the picture. Maybe REITs, maybe direct property. You explore alternatives. You understand bonds more deeply. Duration, yield curves, credit risk. Your portfolio is no longer a collection of assets. It's a system. a system designed to survive different environments. Now, protecting your capital becomes just as important as growing it, because losses at this level take time to recover from. Then comes another threshold. $1 million. And something interesting happens. Opportunities start finding you. Private deals, exclusive investments, conversations you didn't have access to before. Not because you changed, but because your capital did. You begin evaluating opportunities differently, not just based on potential returns, but downside risk. What happens if this goes wrong becomes as important as what happens if this works. You build a team, advisors, specialists, not to think for you, but to help you think better. Your portfolio now has layers. Public investments for liquidity, private investments for growth, real assets for income, each with a purpose, each with a time horizon. And as your capital continues to grow, so does the responsibility. At higher levels, investing isn't a side activity anymore. It becomes the main function. Every decision carries weight. Every percentage matters. You build systems, processes, rules, because emotions at scale are expensive. Eventually, the numbers grow so large that the game changes completely. You're no longer picking investments. You're allocating capital across strategies, across markets, across managers. You're deciding where money flows. And at the highest level, you're not just participating in the market. You're influencing it. But here's the truth most people miss. Every level starts the same way, with that small, quiet decision to begin.
So, if you're at the beginning right now, feeling like your investment is too small to matter, it's not. Because you're not just investing money, you're building the mindset that creates wealth. And that's exactly what we talk about here on the Asset Avenue Club. Simple ideas, clear thinking, real strategies. So you don't just follow the market, you understand it. And if you stay long enough, you grow with it.